IPO as well. One such case is Jyoti CNC, and looking at its numbers, it does look like it warrants such a move given the fact that they reported a 58% growth in their top line as well. Mr. Jadeja, the chairman and MD at Jyoti CNC, is joining us to talk to us more about that. Mr. Jadeja, very impressive set of numbers, but I believe that's also partially on account of a low scale. As things move forward and the scale resets, how long do you think you can sustain this 50-60% kind of growth rate? And if you take FY25 as a whole, what number should we expect in terms of a revenue growth?
See, if you look at that, our order book today, we have close to 3,200 crore plus, and then many orders are in pipe. So, and the way in India today, the manufacturing sectors are growing, and our customers are coming over here more and more in investing over here. We are looking a more sustainable growth on a many multiple year to be from here.
Okay, years of growth is what you are witnessing, but talk to us about the growth drivers, because EMS as a segment is something that has been much talked about. We've been hearing a lot both in terms of the policy action as well as industry experts, and the same can be said for defense as well. You operate in both of these segments. What kind of growth rates are you expecting here, and what's the plan of scaling up?
So basically, up to the last year, in EMS business, revenue was nothing. It was zero. The last quarter, it started showing us 12.5%, and we are looking the entire year. The next year is to be close to 20%. This is the new growth will come from them. Even then, aerospace and defenses, let's say last year we were at around 20-25%. This year we are going to cross 40% over there. So these are the both two growth drivers are for us for the next 3 to 5 years. Is clearly visibilities are seeing from here.
Visibility, sir, that you're seeing from both these segments, aerospace as well as EMS. Good afternoon. This is Vinny joining in the conversation as well. Mr. Jadeja, I want to also understand if these are going to be the growth drivers. What are the margins like for both these segments? Currently, obviously, we're seeing the 25% in terms of margins. Is that something that you would be sustaining as well if EMS sees an increase or aerospace sees an increase? Will these margins sustain?
So basically from here, we are going to look at something still better from here. Okay. And both this area of margins are quite in comfortable zone to be there.
Zone, and we could be expecting better means more than 25% going forward. So that's something that we're watching out for as well. But so obviously, given that, obviously the recent IPOs, your debt is going to be reducing as well, right? So in terms of how much would that add in terms of savings, in terms of the finance cost, what is that indication?
So next year, we are looking to be close to 55 to 60 crores as the finance cost is going to be reduced to be there.
50 to 60 crores is the cost that you would be saving. So currently, your profits are almost 48 crores. So that would directly be adding to this as well. So then where do we see the profits for the company in the next 3 years? Where should we be expecting it? Because if that keeps adding to that in terms of savings, what is the indication, internal target that you'll have there?
So we would like to, let's say, to improve what the margin we are today is. We are trying to improve from here to a little bit furthermore. And this is a 1 quarter, let's say this is a 1 quarter profit. You can understand it is going to be multifold profit to be there in the next entire year.
Right. And let's just talk about, one more thing is in terms of your Hurun, the French subsidiary as well. Is there any specific capex that you require for that or investment that we require in that? And that's also mainly into aerospace side. So, how does that also work in terms of the production that will be there as well?
So basically, we are looking to be close to next year. The capacity is going to be constrained and the next after 2 years, the way the order book has been built up there for the large machine. So we are just constructing the assembly bay for the large machines, and we are going to invest close to 40 crores to be there.
Okay, investment of close to 40 crores is what you're looking there. Also, sir, just in terms of EMS, anything in terms of order book pipeline that you could highlight for the next few quarters, at least for us, or the next year?
So yes, definitely there is today we are close to in our order book is close to 8 to 9% is orders are from EMS sectors, and we are looking to be reach out to next year to be close to 15 to 20% to be there.
Okay, Mr. Jadeja, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of what we should be expecting from the going forward from the company as well. So it was great talking to you, Mr. Jadeja. That was the man.